In this video, I will show you the craziest 15-minute scalping strategy on my channel. I will show you what indicators to use and what settings to modify. Then I will teach you when to enter long positions and when to enter short positions as well. I will show you where to put take profits and stop losses, and lastly, I will back test this strategy 100 times and show you realistic results you can achieve using this scalping strategy. So stay tuned and let's trade. Alright, so we are currently looking at a 15-minute chart of Apple. Now let's add our two indicators we will be using for this scalping trading strategy. Open your indicators tab and search for buy and sell, backtest single EMA cross. We will be using this community script by Che Trader, so left click this indicator once. Now, let's add our second indicator, which is called Fund Flow Trend Oscillator. We will be using this very first one by Black Cat 1402, so once again left click it once, and we are finished with adding indicators to our chart. Now, in order for our strategy to work to its full potential, we need to change a few settings for our indicators. So let's start by modifying our buy and sell indicator. This indicator adds buy and sell signals and these colorful EMA lines. To open this indicator settings, double-click either one of these signals or one of these EMA lines. So first of all, open this Inputs tab. In here, change this Select EMA 1 value from 10 to 21. And also change this Select EMA 2 value from 20 to 34. All other values are fine as they are, so let's move on to Style tab. In here, disable this Trades on Chart setting. This is everything we needed to change for this indicator, so press OK, and let's move on to our second indicator. This is the Trend Oscillator indicator, and it will function sort of like our volume indicator. So, double-click anywhere in this indicator, and you will once again open its settings. We only need to change 3 settings for this indicator, and all 3 are located in Style tab. We want to disable this plot candle, which has color 0 set to yellow. This plot candle, which has color 0 set to white. And we also want to disable this other plot candle, which has color 0 set to light blue. Now when you're done with disabling these 3 options, press OK, and we are finished with our indicator setup. Now that our setup is complete, let me show you how to trade using this strategy, starting off with long position. If you want to make money using this trading strategy, you need to follow a few steps in order, and you will make successful trades all the time. So, in order to simplify these steps, I created this very simple 3-rule strategy that we will use as our trading blueprint. This strategy will tell us exactly when we can enter a long trade. So, let me explain what 3 rules we will follow. Rule number 1, buy signal. Like I mentioned previously, our first indicator adds these buy and sell signals, and also these EMA lines. This rule is the easiest one to follow, but also the most important one, because without buy signal we can't go any further into our strategy, so that's why this is our first rule. As you can see, our signals are created at the exact position where our EMA lines cross each other. We will use this location for our stop loss, but more about that later. Now let's move to our second rule. Rule number 2, trend oscillator candle must be colored green. This indicator gives us a signal whether or not we are in a bullish pattern or a bearish one. As you can see, the market constantly changes from bearish market to bullish market and vice versa. For our strategy to work flawlessly, we need to make sure that we are in fact in a bullish market, meaning that more people are buying than selling, so the market price will go up. Therefore, we will always check whether or not our trend oscillator candle is green colored. Our third and final rule is that our trend oscillator candle should be above 80 level. This 80 level starts at the bottom of this purple colored section, so anything in this purple colored space, as well as above it, is signaling that we are in a bullish pattern. Be careful, because our second rule says that the candle must be green colored, or it's a fake signal otherwise. This rule is basically an add-on to our second rule, because both of these rules use the same indicator. We obviously don't want to enter the market every time it goes bullish, because this run can end only after a few minutes, and that's why we need our trend oscillator to reach a certain level before we can enter this trade. Great, now that we have all 3 rules set, let's see how this strategy works on a real-time example. So, let's try this strategy in action. All we need to do is follow our 3-rule strategy, and we will always enter a long position correctly. Let's check if all 3 of our conditions are met. Alright, so rule number 1, buy signal. Here you can clearly see our buy signal, thanks to our first indicator, so our first condition is met. Our second rule is that our trend oscillator candle, right below our buy signal, must be green colored. This second condition is also met, and our trend oscillator is also signaling that we are currently in a bullish pattern. Before entering a long trade, let's see if our third and final condition is also met, which is that this trend oscillator candle is also above 80 level. It is well above this level, so with all 3 conditions met, we can confidently enter a long position. Our stop loss will be placed at the EMA crossline. and our risk to reward ratio will be set to 1.5. Now that everything is set, let's see how this plays out. Our prediction was correct, and we made a profitable trade. If we were to trade with real money, and we risked 2% of our account size, we would have made around 11.62% of our initial account balance just from this one trade. If you still fail to understand how to trade long with this strategy, I highly recommend rewatching this part of the video, because right now I will explain how to enter a short position and what rules we will use for our short strategy. If you are paying close attention to our long trades, you will be happy to know that for our short trades we will use identical rules, but reversed. So, what do I mean by this? Let me explain. Let's start with the rule number 1, which is that we must wait for sell signal. Our indicator, which gives us buy signals for our long position, can also give us a sell signal, which is essentially a bearish direction signal, so we will use it in our short trade. This signal is also created at EMA line cross. For sell signal, the blue line needs to be above the orange one before they cross each other, and for buy signal it's the other way around. Rule number 2, our candle in our trend oscillator must be red colored. Once again, this is the exact opposite as in our long position strategy, where our candle had to be colored green. When the candle is red, we are essentially receiving a bearish signal that there are more people selling than buying in this market, meaning that the price will eventually go down. Our third and final rule for our short position strategy is that our red colored candle in our trend oscillator must also be below this 20 level. This level starts at the top of this yellow section, so everything in this section, and also below it, meets our third condition. Now that we set all 3 rules for our short position, let's see how this goes on a real-time example. Just like with long trades, we also need to follow our 3-rule strategy while entering our short trades. So, let's quickly recap what rules we're using for our short position. Rule number 1, wait for sell signal. The easiest rule of them all, but also the most important one. This condition is met, and so is our second one, which says that the candle in trend oscillator must be red colored. Now, for our third and final rule, we need to look into trend oscillator once again and check if our red colored candle is also below 20 level. It is. Our third condition is met, and so are our 2 other conditions, meaning that we can enter a short position. Our stop loss will be set to EMA crossline, and our take profit will be set to 1.5 risk to reward ratio. Now that everything is set, let's see if we made yet another profitable trade. Our prediction was once again correct, and we made another profitable short trade. If we were to trade with 2% of our account size, we would have made around 7.4% of our initial account balance. Now, I will back test this strategy 100 times, and then I will show you what results you can expect. The importance of back testing is something I cannot emphasize enough, and I believe every trader should do it, because this is something that will put you into 1% of traders. You can record all the data by using Google Spreadsheet, or you can use a better route and use Trader Edge instead. Trader Edge is literally the best backtester on the internet. Thousands of traders around the world are using Trader Edge to get an edge on their competition. Trader Edge is 3 times faster than a traditional backtesting method. All you need to do is set your initial account size and a profit and loss per trade. Trader Edge will give you all the info you need about this strategy, such as the win ratio, the profit and loss, the maximum drawdown, and much more. Once you're finished with backtesting, you can save the results to the strategy library. Besides that quick and easy backtester, they've also got some other useful features on their website, such as the position calculator, which can be very handy for those who trade forex and commodities, the profit and loss calendar, where you can track your trading performance and make some important notes, and the indicators and strategies menu. Here you can find and download some super accurate tools for MT4 and TradingView platforms, and they've all been proven to work. If you're not entirely sure how to backtest, no worries, you will get a full step-by-step backtesting plan which has $100 value. If you're not sure how to build a profitable trading strategy, no problem, you will also get a full course on how to build a profitable mechanical trading strategy which has $270 value. And if you sign up right now, they'll also include 4 pre-made high-quality strategies that have $100 value. So that's around $500 worth of bonuses, all for free, but only if you sign up right now. Trader Edge has a 7-day free trial, so there is absolutely no risk at all. So go ahead and check it out. I will leave a link in the description below. Now, let's see what results you can expect by trading with this strategy. After 100 trades, I can finally show you realistic results you can achieve using this strategy. Out of all 100 trades, this trading strategy was profitable 82 times, meaning we got an 82% win rate strategy. With our initial account size set to $1,000, we grew our account by 684%, which is about $6,847. Our profit factor is 6.83, and Trader Edge gives our strategy score of 96 out of 100, meaning that this strategy works almost flawlessly. Now, let's end this video by comparing this strategy with our other trading strategies. This is the fourth strategy we are adding to our trading strategies spreadsheet. The link for this spreadsheet is in the video description, so if you want to compare these strategies or watch my videos for one of these specific strategies, you can. As I upload more videos, this spreadsheet will grow, and we will find the best scalping trading strategy there is, so if you want to be a part of this journey, make sure to subscribe, and I will see you in the next video.